Hello, fellow traders. 'Tis I, the Rumpled One. If you want to contact me or find me, I put it out here on the screen, but it's amazing how many people, post. What's your email address? It is Monday, March the 25th. The year is 2019. Let's talk trading. How to trade like a pro. The hardest part about trading. What is the hardest part about trading? Take a few moments to think about it, to ponder it, and come up with what you think is the hardest part about trading. What's the hardest part for you? What do you struggle with? What's the difficulty? What makes trading hard for you? Now, I believe I mentioned in a video that it's like a three-legged stool. Trading is, life is. Because see, if you have a three-legged stool and all the legs are the same size, it's firm. But if one of the legs is short or weak, the stool won't stand up. I mean, you can have a four-legged stool with a short leg, and then it's just kind of wobbly, and it's sits on three legs. So that's why three-legged stool is stands solid, holds firm. What's that got to do with this? Well, usually there's three parts to things. So, like with trading, it's kind of four parts, but there's entering, exiting, and waiting. You wait before the entry and you wait after the entry. Then after the exit, you start waiting again. So there's those three components. Now, I'm going to give you a hint where you can find the hardest part about trading. Are you ready? Okay. I want you to go to the bathroom and look in the mirror. That's right. You are the hardest part about trading because entering and exiting is a simple mouse click. Okay? That's all it is. But to make those clicks turn you a profit, that's the trick, right? And you see, part of that, one of those legs in trading is the money and risk management. Okay? But it's simple, it's easy. Risk, the dollar amount or percent of your portfolio that you're willing to lose per trade. So if you have $1,000 account and you're willing to lose $10 per trade, then it's kind of simple. You have $10, and let's say you're going to put your stop loss 10 pips away. So basically, $1 a pip times 10 is 10. So you're going to have a position size of $1 per pip. That's easy. That wasn't too hard now, was it? So the problem is when you make it hard. You make it difficult because you don't do what you're supposed to do, which is put that stop loss on each and every trade. And then sooner or later you get freight trained and maybe you get that margin call. Game over, right? When it's so simple, if you just do this one thing, that won't happen. It happens to people all the time. Why? Because that person in the mirror doesn't do this. So you see, you are that one leg that's short or weak. So you have to strengthen you. Now, so you've got money and risk management, and you've got you, and then you've got your method, right? Your trading plan, the indicator that you like to use. Well, do you have a written trading plan? Or are you just winging it? Or as we like to say, airballing. Shout out to my friend Ben there. Airball. I mean, you have to be honest. Are you winging it? Or are you actually following a trading plan? Because if you're not following your trading plan, guess what? Go to the mirror and you'll see the reason why. Now, last night I told you there was, what, 6 unfilled gaps? Well, look, we only have 3. So there was opportunities. You guys see this happen every week, and I don't know if anybody's actually replied back and said, hey, you know what? I've been watching those gap fills and I'm going to start trading them. Of course, if you're here in the US of A, that means you'll be in the computer, at your computer somewhere, Sunday afternoon, where you might rather be watching NASCAR or hockey or basketball right now, or tennis, or, going to the theater or the movies, or outside when it's warm. So, there's lots of reasons why you might not want to be in on those Sunday trades. Your trading platform isn't open, so you really can't preset those trades because you don't know which way the market's going to gap until it opens. Then you can see which way it gapped. But what you can see here is that the euro yen dipped down into the previous lower wick zone, the previous week's lower wick zone, and then came right back up. So those of you who trade that wick zone know price goes in the zone, comes out of the zone on a regular recurring basis, enough that you can make profit. But you see, maybe that's not what maybe you don't like to trade the wick zone. And that's okay, it doesn't hurt my feelings. But the point is, if you have this method and you enter here and you place your stop loss, then it's up to the market. Because you see, at every price point, there's people, traders across the world, shorting. There's traders across the world buying. And there's traders across the world waiting. So once you understand that, maybe it'll help you realize that the reason you enter the trade has no bearing on the outcome. Because there's, traders all around the world using their methods and their reasoning and their logic, or maybe they're just airballing, and they might be trading the opposite way you do, which causes a drawdown in your account. And maybe sometimes it causes your trade to hit the stop loss. You have no control over that. None whatsoever. So, since you can't control the outcome or when it happens, the one thing you can control is where you place your stop loss and the amount you trade per pip, i.e. your position size. So if you fail to do those things, the problem, once again, can be found in the bathroom mirror. It's you. And I always like to say it's not what you trade, it's how you trade it. So it doesn't matter if we're trading Forex or which one of the pairs we're trading. The currencies, right? It doesn't matter if we're trading stocks, futures, commodities. It doesn't matter if you don't have your risk and money management in place, if you don't follow your trading plan, if you don't do what you need to do, it's going to get you sooner or later. Now, for example, I like Miatas. Anybody who knows me knows that back in about 2001, I think, I bought a couple of Miatas. I had one for the track and one for the street. And then when I came back to the ranch here, I got rid of them. But last year I got Miata. I just couldn't take it anymore. Every time I'd see a Miata driving up and down the highway with the ocean view, it just tore at me. And I just finally said, you know what? Life is too short to not drive what you want to drive. So I went out and got a Miata. Well, I'll let you guys in on a little secret. I've bought 4 Miatas. Now, I got one off an ad, and then I found this site, Copart. They're all over the country, and you can buy at auction. So what I did was I set my buying threshold at a low price point. So I can't spend more than a amount. If it goes over the bid, if the bid goes over my price, I am automatically shut out. So that's my safety, so I don't get too crazy. And they sell cars other than Miatas. In fact, I was looking at a sale, and there was a Hummer. And I wasn't in the market for a Hummer, but it was this nice what was it, an H3 or H2? No, H3. And it was like, wow. And the bid went up, and I hit it. And the last time I entered, it was at my max. That was my threshold. And somebody outbid me. And the thing is, they won it for like $200. And it was just like, oh man, I would have bid another 100. But then it's like, would I bid another 100, or which would have been 200 more after that? See, I put in a point where it that was my stop loss. So you see, I got stopped out of that auction. So the same things with trading, because if you think about it, trading is what? It's an auction. Hey, you know what? We've got euro yen to sell at probably the ask is what one. Let's just go to another screen here that has the ask on it. Okay, why can't I find a screen with the ask price on it? That's too funny. I know I've got one somewhere. Okay, here we go. So anybody want to buy a euro yen at 124.49? Actually, you know what? All I had to do was hit the F9 key. There we go. Anybody, give me 124.50. Do I hear 124.50? Come on. Somebody, give me 124.50 for some euro yen. Okay, 124.49.9. How about it? See, that's what's going on. You realize this is an auction. So maybe if you think of it in those terms, it's like, oh yeah, maybe the light bulb just came on. And as you can see, we've got a green day, a green week, but we're still below the monthly open, and we're still below that yearly open. And you can see here we're still putting in the range for the week. Here's the first day range for the year. First day of the year's range from here to here. And here's first day of the month. So you see we popped out of that low and dropped back in here. And you can see we're here once again below these opens. And once again showing the range. I'm going to flash through here. Oh, and somebody said they really liked how using the inside bar, how they only used it on, see, I guess on the next day. They didn't think about using it, you know, later down the road. But yeah, that inside bar can prove to be profitable. And here we go again, showing how price didn't break out of the lower wick zone to the downside, but did come through the upside. Got 4 pairs over 100 pip range, with the new beast leading the pack at 160 and the euro yen at a respectable 93. And we put in the weekly highest open here, made almost a second chance. And the buy zone, you see we hit the pivot last night. We had come down here and we were somewhere here, I believe, but it finally took out that pivot. Once again, the pivot is a bias trade. You want to trade toward the pivot, away from the open, toward the pivot, get in, and hopefully you'll get some pips, right? And the rat zone, once again, you can use the rat zone. Doesn't matter which time frame. I usually show M15. You can switch over to H1 if you want, but you see those numbers do not change. So the rat zone's time zone independent. You can even use H4. Now, thing about it is, and if you really want to go herky-jerky, you can even use M1. But the thing about the rat zone is that you just want to get your trade in when the price is in the rat zone, because you believe price is going to go out. So you can see here, there you go with M1. We'll scrunch the chart, and that's what it looks like, okay? But I like to use M15 for display purposes. And so, and we have to wait for this. Okay, I'm going to have to pause the video. Okay, I had to pause the video because I'm running out of time. So remember, the hardest part of trading can be found in the mirror in your bathroom or wherever else you find a mirror. Because it's not what you trade, it's how you trade it. So get out there, drain the bank.